As what I've mentioned, its dividend yield is 5.53%. Next, we have Asian Terminals. Market cap is 28.68 billion. It's in the higher end. However, they have a high dividend yield, and also the market cap is relatively decent. It's relatively close also to our demarcation line of 20. So if you choose to exclude this because its PE ratio is relatively higher and because there are other options out there also, it's totally fine. Hey guys, so in this video, we're gonna talk about something different. I know we've been talking a lot about dividend stocks because they have been a very, very good way for you to have ownership of stocks. But in the same way, you receive passive income, cash flow from the dividends that they actually give out. And what's nice again about dividends is regardless if the market is up or down, or there could be a very, very long time that the market is bearish, but as long as you own the stocks and as long as they keep on giving dividends, you have... So guys, Satoshi's in the background if you hear. The market could be bearish for a long time, but as long as the stock is giving out its dividends on a regular basis, that you would still receive revenue. And it's a really, really good way for you to be able to earn. Now, that being said, in the past videos, we talked about the top dividend stock. Now, I'm gonna combine the other things that we talked about and learned in order to filter out certain stocks that fit certain criteria. What I'm gonna do right now is we're gonna talk about dividend stocks that have been consistent in giving out their dividends, but not just that, somewhere close to at least 5% in their dividend yield on a regular basis. Plus, we're gonna combine our lessons on buying stocks that are cheap, but not just that, we want stocks that are cheap with relatively higher market caps as well. So the filter for this video, if you want to drill down and know what we're gonna talk about, or at least figure out what are the stocks in the list, these are stocks that have high and consistent dividend yields, somewhere around at least 5%, with a certain market cap, but also relatively cheap. So in terms of fundamental parameters, you have PE ratio, market cap, and dividend yield as well. I'm gonna give somewhere around 14, somewhere around that number. Can you guess which companies will fall in this criteria? And please do notice, there will be some stocks here that we did not mention in any of the videos, or there will be some stocks here also that are part of their top dividend stocks but are not part of the list, mainly because of the set of criteria that we have as well. Mainly because also this is pretty much driven as well by PE ratio, meaning you're looking at companies that give you higher yields, but in the same way have the ability also to give you dividends that as you purchase them, their PE ratio is relatively lower. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very, very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. See the links below, and back to the video. Let's start with East West Bank. Its market cap as of the time of this recording is 16.99 billion pesos, while its PE ratio is relatively low at 3.65x, and its dividend yield is at 5.86% by the time of this recording. Next is we have PhilREIT. Its market cap is 25.88 billion pesos with a PE ratio. This one is relatively on the higher side, but I just included it already. Remember, our filter is somewhere around 20 is considered expensive already. The PE ratio of Philinvest REIT is around 21.09. It's in the higher end. However, they have a high dividend yield, and also the market cap is relatively decent. It's relatively close also to our demarcation line of 20. So if you choose to exclude this because its PE ratio is relatively higher and because there are other options out there also, it's totally fine. PE ratio is 21.09. Its dividend yield is 6.28%. The next one, we have Pilipinas Shell Petroleum with a market cap of 27.33 billion pesos and a PE ratio of 6.7 with a dividend yield of 5.53%. Just a caveat also for oil or any petroleum products, please do note also that the revenue is highly dependent on a lot of external factors, a lot of macroeconomic factors as well. It's highly also dependent on what the price of oil will be globally. And from a long-term perspective as well, please do realize that a lot of the governments and corporations are shifting to more renewable sources of energy as well. As what I've mentioned, its dividend yield is 5.53%. Next, we have Asian Terminals. Market cap is 28.68 billion with a PE ratio of 9.5x, relatively cheap, with a dividend yield of 6.34%. Next, we have GMA7, and this has been in our dividend yield list for quite some time. They have been giving out high dividends, especially when ABS-CBN shut down. Their market cap is 33.31 billion with a PE ratio of 14.85x and a dividend yield of 11.66%. Now let's proceed with Ginebra San Miguel. Ginebra San Miguel has a market cap of 41.92 billion. PE ratio is relatively cheap at 9.23x. Dividend yield is below 5 but close to 5 at 4.57%. Next is we have Synergy Grid, highly connected to energy, 53.61 billion. In terms of market cap, its PE ratio is relatively low at 3.58 and you have a dividend yield of 8.55%. Okay, so we're now going above the 100 billion mark in terms of market cap. We have Semirara, which has been part of our list for the longest time. You have SCC, traditionally a stock that has been giving out high dividends. Market cap is 120 billion pesos with a PE ratio of 3 and a dividend yield of 5.82%. We have the MCI with a market cap of 134.01 billion and a PE ratio of 4.32, relatively cheap as well, then a dividend yield of 12.14%. Next is we have Metrobank, MBT, with a market cap of 265.27 billion, a PE ratio of 8.13, and as of the time of this recording, its dividend yield is 5.09%. Last two, you have San Miguel Pure Foods with 280 billion in terms of market cap. Then you have a PE ratio of 12.6%. Its dividend yield is slightly below 5 at 4.93%. And to round everything off, this is one of the stocks that has been in our list over and over. It's highly defensive. You know that the earnings will be predictable. You know that they can sustain their dividends also because they'll never run out of sales or revenue on a regular basis because they're a necessity, but not just a necessity, monopoly. We have Meralco, market cap is 375 billion. Its PE ratio is 12.29. So even though it's crossover from a price standpoint to over 300 pesos per share, its PE ratio is at the 12.29 mark, making it relatively cheaper still. And its dividend yield right now is still at 5.35%. So let me know, do you own any of the stocks that are part of the list? And this is nice now because you can also reference this to our top dividend stocks and you will see some of the ones that are there right now in that list that are still cheap. And as part of what I've mentioned also, GMA7 is part of it, Semirara is part of it, DMC, Manila Electric is also part of it. Then you also have, of course, REITs. The cheapest REIT that we have right now is PhilREIT. And I forgot to mention this, if you put the REITs side by side, one of the reasons why it's relatively lower also in terms of PE ratio is that comparing it to, say, A REIT, C REIT, M REIT, RCR, it's been the one that has been battered in terms of price as compared to the others. And please do note that price over earnings per share, the lower the price, the cheaper it actually gets, and that's why you have PhilREIT as part of the list as well. So there, comment below if you guys have any questions, if this is something that's helping you, and if you guys want to learn more in this series that we have been doing to filter things out, where we have been trying to narrow things down from a dividend point of view, a market cap point of view, and also a PE ratio point of view. This is where we somehow put all of those fundamental concepts together. If you want to know more about fundamental analysis, there's two ways. Links down below for our webinar, Fundamental Analysis course, which is recorded. You can watch anytime at the comforts of your home. Then another option is to check out the books that I have. The links are down below. They're available also via Shopee. And if you want to join us, Investment Conference 2023, it's happening the next few days. We currently have a promo. Everything that you will know or need to know about the event will be there, but we're going to talk about stocks and crypto in that event as well. I hope you guys got a lot from this. If you stayed up until the end, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.